Hi everybody, how are you all doing today, baby whales? It is now February, Monday the 19th. It's about 8 p.m. Central Standard Time, and I'd like to take a look at Litecoin. Litecoin's always been one of my favorite coins, and I'll tell you guys why. Check this out. Okay, where is it? I've been trying to get through this movie, Three Billboards, for literally a month, and I haven't gone through a single movie yet. So this is why Litecoin. I keep a list of all of my long-term forecasts, and a lot of them are nailed. And because Litecoin's been up there as well, of course, I'm gonna naturally be attached to it, right? So where's my Litecoin? Do you guys see it here? LTC, here we go, November 12. This is when it got me very interested in it. I suggested a breakout right here for wave 1 completion. This is on a daily chart. 57 to $63, bouncing off of the 55 EMA. Boom, we are entered in a trade with an awesome risk to reward ratio of 4.52, with a chance to gain literally 100%. And my first target was very small, 122, and my second target was 177. And I suggested 4 to 6 months, completely off. It only took like a month and a half. Probability of success was very high as well, at 70 to 80%. So because of these nostalgic coins of mine, I know that we should never add emotional attachment to our coins, but of course we are going to get attached to the ones that we find great success in them, right? And Litecoin is one of those coins that I would like to hold for swing positions when we reach critical breakouts. So the first thing that we should always do when looking at a new coin is identify, no, not new coin, but looking at a coin in general, we should always look at where some of the key breakouts are, whether it is up or down. So let's take a look at those and make sure you guys, or I would appreciate it, not make sure, sorry, that came off wrong. I would appreciate it if you guys really appreciate these kinds of content that I'm releasing, upvote it on Steemit, and like, subscribe, and share as well on YouTube and on Twitter and on Steemit. If you guys are not following me on all three social media platforms there, you might be missing out on a lot of the relevant information that I put out. Steemit has my general bias and a blog with a lot of charts that you might want to be kept up to date on. Twitter just has my general thoughts, and YouTube, of course, has the videos. So I just want to make sure that you guys are always kept up in the loop. And it's always good to surround yourselves with a lot of good information, or a lot of relevant information rather. The people that do it for a living, the people that are doing this full time, the people that have had success. I'm not saying to follow me exclusively, definitely not. Surround yourselves with like-minded individuals that have a high chance of making sure that they contribute to your success. And that's one of the key things that I would really want you guys to do. Follow people like Eric Cho, follow people like the chart guys, follow people like Crypto Cred, follow people like I can't remember who else, the Big Chet, right? That's who I'm talking about. Crypto Credibility, you know, follow Eric Cho, these guys, follow Hygen. I can name so many people, and I apologize if I missed some of them, but these guys are the people that will be key ingredients to your success down the road. And I know for a fact that I will be as well. Why? Because my ultimate goal is to honestly see you guys succeed, despite everything going on, and you know, a little bit of the backlash, or not a little, a lot rather. You know what? It's part of the game. I'm still getting used to how to adjust to this social media platform. I never knew that my technical analysis abilities would skyrocket me to 120,000 followers, which I truly, truly appreciate. And because I have so many supports and followers, I'm going to try my best for you guys to focus on the positivity and really weed out the negativity. I'm actually going to get together with a bunch of friends later in the week, this week, and we're just going to brainstorm for some ideas that can help me be a lot more, what's the word, patient when it comes to dealing with the negativity. And this is a completely different animal to me. I've never been through a situation like this where I'm gaining some sort of prominence in the community, and it's up to me. And it's up to me for you guys. I want to do it for you guys to learn how to deal with this type of negativity online. And I've got no doubt in my mind, with my perseverance and my ability to take pain and my Asian raisin-sized balls, which are made of steel, I'm going to persevere through this, no problem at all. So just give me a little bit of time, guys. Still learning how to deal with this type of pressure online in terms of negativity, and also being called out for my wrong plays. And once again, I've never been through something like this, right? So everything that we take in life, guys, is a positive experience, right? I cannot control how other people react. No, that's not something that we can ever control. If we expect something from people, it just ends up leading to disappointment. And I do not want to be disappointed because I don't want to have any expectations of how people should behave and react. We all come from different backgrounds, we all have different values, and because we come from such vastly, drastically different backgrounds, I think I have to be a little bit more, I guess, what's the word? Strong-willed when it comes to wanting to ignore these people. So it's, you know, a little bit of you guys are going to get to know me a lot better over the years, trust me. And I'm like an open book. I wear my, you know, my heart on my sleeves, or emotions, whatever you want to see it. And you guys are going to see me go through, you know, turmoils up and down as well, right? When I have a bad week in the market, you guys will hear all about it, and my emotions will pour out as well. And I think that's one of the key things as well, to be transparent online, so people can relate to it and know that I'm not trying to fake anything. I'm trying to have your guys' back, and I ultimately want you guys to succeed. So let's get into this really quickly, and enough with this spiel. So let's talk about how this could have been played, okay? It's very important for us to make note of how positions can be played, because it gives us insight to what we can do in the future, right? And that's important distinguishment to make always. So what I like to do is I like to draw my supports and my resistances. So aside from Elliott wave right now, we're going to more so focus on trendline analysis. So let's say we drew a trendline like that right around here, and I cloned it. We see a pretty, you know, we can't really draw a channel in any way that's relevant over here. It's more so making some sort of triangle pattern like this, right? I'm just being very general. So whenever it squeezes into a point, there's a chance that it's going to break out up or down one way or the other. Now the best way to play this, guys, and please remember this, is to play breakout upon bounces. This was a major resistance. As soon as it broke out of it, I'm sure that a lot of people missed this opportunity. But the moment that it bounced off of this support line, which was a former resistance, and the moment that it started bouncing off of these regions, especially this candle right here, especially this candle right there where it was rejected to the downside, rejected, and this would have been a very key point to enter a trade on February 12th, right there, okay? Right here is the key point to enter, because we have supported above this line. We're now bouncing above the 55 EMA, and now this breakout price is when a lot of people entered it. So let's say you entered a position right here, which would have been a very wise thing to do, playing breakouts. Playing breakouts is a very important skill to have. We cannot always accumulate on the bottom because we simply don't know. Actually, let's be more realistic and enter on this breakout right here, okay? If we entered on that breakout right there, we would have first of all tried to define a target by using Fibonacci extension. And a very reasonable target, in my opinion always, is a 1-to-1 extension, slightly higher than it. Because what we assume is that wave 3 is often the longest, so it can be longer than wave 1 but shorter than wave 5, and it can be longer than wave 5 but shorter than wave 1. As long as it is not the absolute shortest, you're good. Now, where would a reasonable stop loss have been? A reasonable stop loss upon breakout would be right here, at this line, below it. So slightly below it, and you would have targeted yourself a nice 1-to-1 extension, excuse me, slightly higher than it. And once you target something a little bit higher than that, boom, you're now in a trade with a very nice risk to reward ratio of about 5.67 to 1. Now, you could have wrote it and tried to go a little bit higher. This is just a general target, right? You could have targeted a little bit higher depending on where you take your profit, but just generally speaking, with your risk to reward setup right here, it was 5.67 to 1. And that is awesome, right? Let's say you ended up getting higher than that and you wanted to say, okay, I'm going to shoot for the middle between 100 and 161.8, then you would have had a risk to reward ratio of 7.53. Awesome. So we have pretty much hit target. From what I see, yeah, definitely we've hit target. Now, there's many ways to count this. This could be 1, 2, this could have been 3, 4, and then we get a double bottom, something like that, or double top rather. So for Elliott wave, it's a little bit confusing right now, and I'm not going to focus on that too much. What I would like to focus on for everyone right now is this. What we see very clearly is that, don't we? It is wedging into this type of shape right around here. It is being supported above the 55 EMA right here. Litecoin is not really going on a massive bull run like Bitcoin right now. Bitcoin is on this huge bull run, and a lot of the times it'll carry these other altcoins with it. But what we see from Litecoin is it's not really doing too much right now, and it's actually staying in a very sideways type of consolidation. So if I drew this breakout probability here, or breakout pattern, what happens is whenever we get an apex right here, what an apex is it's a key point where trend lines are meeting, right? Take a look. Oh, I keep double clicking on it by accident, my apologies. What we see is that it's squeezing into this point, and when it does squeeze into this point, one of two things happen. And we always have to be ready for a breakout, up or down. For the bears, you want to short it. For the people that are not familiar with what shorting is, it refers to betting against the market. It does not mean you sell what you have and you buy back cheaper. It does not mean that at all. It has a lot to do with the funding and the margin account. For example, on bitfinex, what I do with larger amounts is I put my money into funding. And because I put my money into funding, what bitfinex uses it for is they lend it to the people that are in a margin account. So what these people like myself who short markets often do is we will bet against the market. So let's say we're shorting one Bitcoin at $10,000. It means that we're borrowing from someone who has contributed to the funding account on Bitfinex. So if I'm shorting one Bitcoin at $10,000 and I'm betting that it will go down, excuse me, what I want to do is I want to buy back that one Bitcoin at a cheaper price. So then I buy back a Bitcoin, for example, at $9,000, and then I pay back. It's all automated in the system, so I'm just talking about the back end stuff. You pay back the exchange, the one Bitcoin at $9,000, and because you literally bought it for $1,000 cheaper, you get to keep the difference of the $1,000. It's pretty much the exact same thing as going long, but the opposite when you think of it like that, okay? Because if you went long at $10,000 and you sold it at $11,000, well, you keep the $1,000 difference, right? And you're getting your $10,000 back in this case. So shorters, definitely keep in mind that this is a very critical point right now. I don't know when it's going to break out. It could be any time between possibly now and up to this squeeze in the triangle. There's a very small chance, guys, that it's going to go sideways and just break out of there and go sideways. Usually something like that doesn't happen. This is called a symmetric triangle. And in a symmetric triangle, it's very neutral, actually. Let me show you guys the different types of triangles. I'm sure you guys know this one. That would be an ascending triangle. That's a very bullish pattern, but it does not always guarantee that it breaks up. I've seen it break down many times. And then we also have this pattern right here, which is I just drew the exact same one. I'm just testing you guys. We have a descending triangle like this, right? Where we're getting a series of lower highs and the same lows. Here, we're getting a series of higher lows, but the same highs. And we just think of it like a battering ram, where it just keeps knocking at the top, knocking at the top, knocking at the top, and it does not get much lower. Eventually, it wants to break out of it. Here, it likes to keep breaking down. It wants to break down, but it can't get a higher high. Break down, a battering ram going down. And then we also have these types of triangles as well. This one here is called a rising bullish wedge, where it keeps going up like this, and then eventually it just breaks downwards. A rising bullish wedge. And then we have this one here as well, which is called, this one's called a rising bearish wedge. But the traditional term for it is an ending diagonal. For both of them, ending diagonal. And this one here is a falling bullish wedge. Bullish, keep that in mind. A falling bullish wedge where it breaks upwards like that. Now this is usually found in the C position or the fifth wave position as well on a downtrend. This one here is usually found in the A position, the first position, or the fifth position as well. So there's many different ways to see it. And then we also have another triangle called a symmetric triangle like that. The symmetric triangle has a slope line going down and a slope line going upwards. These ones are the hard ones to play because it's just like this one right here where something will happen and we just really don't know what at all. So let's go over coin market cap really quickly and talk about the volume and see if it has actually gone up or gone down. Excuse me. So this one right here, we're at now $775 billion in terms of 24-hour volume. Yesterday, 2 days before, it was actually really high. Yesterday was about the same. Today is about the same so far. So we're losing a little bit of steam, but more so maintaining an equilibrium right now. Market cap is still very decent at $12.3 billion. So it's looking good. Is it priming for a breakout? No idea. What did the daily candle close at? This one here could be seen as very bearish. Actually, the daily candle ended up closing with, yeah, actually it did kind of follow Bitcoin a little bit, $6 up, but not really that much at all. Actually, it was a very bullish candle, my apologies. Not really the most bullish on the daily, but, you know, the volume wasn't nearly as much as the previous day as well, which is kind of a little bit of a concern. And then what else do we see here? The bullish the RSI is not, it's still neutral right now, guys. It's really hard to read these indicators. It's reading a lot of different signs, right? Here it looks like it wants to snap back down. We've been down ticking for a few days now. Let's see on the 2-hour chart what that's giving us. 2-hour chart, there's no really bullish candles or any bounces at all. Nothing too much right now. But we do have to acknowledge that on the 4-hour chart, for example, we have bounced off of the 55 EMA. So we ask ourselves, where is the support, right? And I mentioned in my previous tweets that we found support around 209 to 196. So I'm just going to draw a box here that this could be a possible support zone down over here. This is most likely some wave 1. That's most likely wave 3. What we're looking for is a possible wave 5. And where would a wave 5 possibly be? Let's draw this right here. Possible wave 5 is right here. Take a look. I'm trying to find my Elliott wave tool. Whoops. 1, 2, 3, maybe 4. Maybe 4 somewhere in there. And a 5th one maybe somewhere up here. We have to say this to ourselves always. That wave 3 retraced to roughly between 161 and the 100 Fibonacci region. So there's definitely a chance, guys, that the wave 5 still has a chance to retrace or to target somewhere up there. Let me pull up my Steemit blog and let's get to exactly where it could be. I'm just going to pull up my Litecoin chart here. Give me a second. Sorry for the wait. So if we look on here, the key breakout would be above 238, and we'd be targeting about 265, around there. 265 to 275, which is exactly where I have it here still. Let's go for a little bit lower, around here. So we do see it squeezing into an apex, and something will happen. It's just a matter of time. This is our support range 1 if it falls, and then our support range 2 is most likely around this region right here. This region is about 170 to 180. We have to keep in mind that Bitcoin is getting very, very overbought right now. So we got to ask ourselves, is it possible for it to uptrend without the help of Bitcoin because they're pegged to each other in some way? We don't know. Is this wave 4 where it's going to downtrend to this lower support zone? Or is this wave 4 already where it's priming for a breakout up? We don't know either. So, of course, some possible plays is to play the breakout right here. If it goes upwards, you guys get ready to buy into a breakout. I'm going to call this right here target 1. Target is 265 to 275, right around there. If it breaks down, most likely into this zone right there. And what we'll do is we'll take our Fibonacci extension tool right here, and we'll say, yes, this is a very relevant, super relevant support zone right in here. And if we extend this further as well, which is above the wave 1 territory, this is a very relevant zone as well, which let me annotate for you here. So this is support range 196 to 209. The next support zone would be right around here to support 2 between 170 to around 180, I think 185. Is that what I wrote earlier? Around this range, yeah, 185. So we have to always be mindful of what could possibly happen, right? If it breaks upwards, great, buy on strength. I'm not a financial advisor, but it is what I'm going to do. If it breaks up, definitely. Makes no sense to not buy on strength. But we got to keep in mind that Bitcoin may correct sometime soon, and if it does, we're going to be in a whole lot of hurting. If it does break out, awesome. We can target something very reasonable up here, which makes sense. I don't do time analysis, guys. I'm too lazy to do time analysis because I'm a day trader, and I don't feel that it adds to my trading, put it that way, because my positions are very quick, very in and out. So I've never really needed to do time analysis. So definitely always omit the time. I'm just drawing a green box to show you guys the possible ranges, okay? To 265 to 275 if it breaks up. If it breaks downwards, you guys want to be very patient. You want to be very patient and see if it actually bounces around the 55 EMA line. Then I'm definitely going to be interested in accumulating some. I will definitely be interested in accumulating some. Okay, let's go over some risk analysis. Let's say I want to play a position of, what's a number that people can relate to? 60. That might be a little big. Let's say on 20, and I bought it at around, and let's say it actually ended up going down, okay? And I bought it right around here, the $200 range. I'm in a $4,000 position, and I screwed up. Okay, I screwed up. But I'm aware that it might also reach these lower zones, right? And I'm also being bullish in general, and I'm going to assume that it's going to go up very soon, right? We're talking about the end of the next Bitcoin correction for wave 5. So now, let's say I bought I wanted to play 60 total. So I'm going to buy another 40 to make 60 coins total at, we'll say, $175 around there, okay? No, we'll say 180. So now my base price has been reduced to this number right here. $186 is now my base price. So now my risk to reward is going to be pretty good at about 186 right here to do a dollar cost averaging. I would set my stop loss slightly below the wave 1 territory right there, so I can lose about, say, 10% of my money there. That's a pretty big risk in terms of 10%, but it's the risk to reward that I'm after. And now I'm going to target a wave 5 of about 270. So I'm risking 10% of my money, which I'm okay with, right? My position size will be $11,000. So let's go into a long position. My purchase price is now 186.77. Let's say 187. I'm in a position for 60 coins. My resistance is about 270 right here. My target price is, resistance 275, and my stop loss is about 165. Actually, I think it was lower than that. Yeah, 166, sorry. 166. So this is how I play. I risk money all the time, guys, right? We got to understand that without without risk, there's no possibility of reward. Realistically, I'm probably going to end up making my stop very tight. Like if I bought at 175, I probably put my stop like even lower, right? You guys have to be able You guys have to know where to put your stop losses within your comfort level. Nobody can really tell you where to put a stop loss because these stop losses are entirely dependent on your ability to take pain and also your ability to ladder. So now, if I'm in this position, if it does downtrend, then I've got myself a chance to win up to $5,000 in my 11K position, which is actually a big risk to, which is an awesome reward. But I've also got a chance to lose $1,264. So this is how I treat my laddering process all the time, by using dollar cost price averaging and also using risk to reward setups as well. So I'm just giving you guys an example, for example, okay? Now, if it goes upwards, even better, right? If it goes upwards, great. You're gonna buy on the breakout, and then you're just gonna target up there. Go to about 270 right there, buy it on the breakout regardless of where it is, and you can set your stop loss slightly below, around here. This is the one that everybody would be waiting for, I'm guessing. You got a chance to lose only 4.51%. You have a chance to win almost 19%, and your risk to reward ratio is 4.21. So is that a win-win scenario as well? Absolutely, it is. What's another scenario where you buy it right here? If it bounces, right? If it bounces here and you've confirmed an uptrend, right? You can set your stop loss wherever you guys prefer. If I were to go long here, I'm not a fan. I will say this very firmly that I am not a fan of 382 fib retracement and going long because it's very risky. So because it's very risky, what I like to do, if it bounces at the 382 level instead, okay, if it bounces up here, I don't ever FOMO, guys. I just use my breakout price right here around 237, 238, right here. I will wait for it to actually break out because I'm super patient, guys. I will target my 270 still, right around here, and I will set my stop loss slightly below this region. So now I've actually got a great risk to reward ratio as well. I've got a risk to reward ratio of 4.65 to 1. Got a chance to lose about 2.72% and a chance to gain 12.65%. So either way, to me, there's lots of opportunities, and I think I've talked about many, right? Playing the breakout, if it does fall to 382, if it falls to 382 as well, another scenario is we buy, say, 33% of our coins. If it falls a little bit lower, right? If it falls a little bit lower, you can add more to it. That's one of my scenarios as well. So at the 382 level is what I'm talking about, right? We missed our chance, big whoop-de-doo, it bounces, we play on the breakout above 237. So we're basically playing the games of probability and what is likely to happen and what is the best possible risk to reward setups that we can take. So I'm just trying to give you guys a very loose example of how we manage our risk over time. And I don't know about you guys, but I think that looking at a technical analysis with a specific buy and sell point, it just doesn't work like that, guys. Like, good traders manage their risk over time, and it's all about managing risk. And I love to dollar cost average. And myself personally, I've got a lot of patience. I have a lot of management skills in general, and my math skills are very strong. And not only that, my patience is high as well, and I can tolerate pain, and I know how to stay in the game. So if it falls to the 382 region, I personally might take the risk of going into position here, but that's me, right? Because I can either keep to my stop loss, but if I do feel that it's going to level off soon, great, I'm in a trade. But if it does go down a little bit and I feel that we're almost there, I've got the choice of cutting my stop loss, or sorry, sticking to my stop loss or adding more. And usually, if I do feel that it's going to level off very soon around specific regions like support 2, I honestly just end up doubling or tripling up because I'm generally bullish in the market and it has worked for me. So that's the possible scenarios. I know I'm getting into very complicated stuff, if you guys have noticed, right? Not a lot of people talk about these types of scenarios. They just talk about if this happens, then that happens. But myself, I want to start introducing a lot of risk analysis as well. And these things are super crucial to understand, that we have to see everything from the perspective of risk. And if there's too much risk involved and you're overexposed in the market, well, you got to ask yourself many questions like, can I handle these types of exposure in the market? Do I have the mental stability in terms of the emotional stability to stay in the game and manage my risk? Or am I just going to end up holding and hoping? Holding and hoping really doesn't work, guys. What works really well is being able to manage your positions through set risk calculations. So these are my quick thoughts that if there's a breakout, most likely the 265 to 275. If it falls down, then these are the support regions. And how you guys manage your risk is up to you. Are you starting to see the difference between a normal trader and a good trader? A normal trader, guys, will just buy with no risk management whatsoever. But a good trader will always, I'm not saying that I'm good, but I know where my skills lie, guys. And I have gotten this far because of how I see risk management and how I take care of my positions by always making sure that I'm not overly exposed beyond my comfort zone and that I'm in a reasonable position with low risk for a possible high reward return. We have to make sure we understand that what we want to do is maximize our top line profits and minimize our bottom line risk and expenses. And these are key criteria that will make you a better trader. Please have a high emphasis on risk management. Believe it or not, it is my absolutely lowest amount of views and hits on YouTube and on Steemit. Every time I post a risk management video, it gets less views than every other one out there. But do you guys know what keywords actually get me the top? Predictions. When I write predictions, targets. Those are what gets me the most views. But I don't want to do that, guys. Risk management, I kid you not, please have an emphasis on it. It will be the defining factor that sets you apart from the normal traders. Risk management will be the one skill that will set you apart from all the amateurs. Because then you'll know how to manage your money. And if you know how to manage your money, then you'll know how to make more money and keep your money. But if you don't know how to manage your risk and your exposure in the marketplace, then how the heck can you grow your account and your money and you make more profits? It's just not possible, right? So these are my quick thoughts, guys. I apologize if it was a little bit long. And thank you. Guys, thank you so much for your love and your support. Really. It makes me so freaking happy to know that you guys are so supportive in the community. And I almost feel really, really bad that I'm letting a few rotten apples spoil the bunch, right? That's why I said at the beginning of the video that I promised to you guys, baby whales, my pod, that I will make an endless commitment to learn how to persevere through these kinds of things. And I appreciate you guys having empathy for or sympathy for me and understanding that this is a very different animal to me. I've never been in this space before, nor have I done anything through social media. So it's a learning experience. But one thing you guys need to know about me is that I'm a champ. I'm a beast. I'm a shark, guys. Despite my, I'm a sensitive guy, as you guys all know already. I'm not going to deny that, right? I wear my thoughts and everything on my sleeves. But at the same time, yeah, I'm a beast at trading for a reason, and it's because I know how to fix things when they're broken. I am an engineer, a mechanical engineer. I am a mathematician, guys. I went to school for 7 years, and I understand a very logical and systematic approach to fixing anything. Not only that, I understand what life is about. I feel like I figured it out, guys. Life is about being happy and doing what makes you happy, and helping you guys makes me happy. Regardless of what anyone says, go take a break. Break from what? My favorite hobby in the world? I'm not going to step away from crypto. This is my favorite thing in the world that I love, that I do not treat as work. This is my playground. And you guys are people I want to see successful. You guys are going to be my family. And I promise that I'm going to be here and make an undying commitment to learn how to deal with this negativity. Because the last thing that I will let happen is let these people get to me for a very long period of time. But you know what? I'll have my days on Twitter. And please understand that. I'll have my angry days on Twitter because I'm on social media so much and making these videos so often that unfortunately I'm not going to be a perfect person. And I'm not always going to have the best image and not always going to create and portray the perfect persona. No, I'm going to stay true to myself and be who I am no matter what. And just because I'm having a bad day, it doesn't mean I'm going to fake it. I will let it out. I will let you guys know what is going on. And you guys are going to be a big part of my life. I can feel it. I've been doing this on social media now since October, guys. About September, actually. So 4, 5, 6 months now. I've been doing this half a year. In January, do you guys know that I only had about 10,000 subscribers and followers? Thank you. I'm at 120,000 now. I'm pretty sure I'm going to get to a very astronomical amount in the future. And it's because you guys empower me. You guys give me the strength to want to become a better trader and especially help out the community further. So I'm not going to give up on you guys. Don't worry. I know you guys have my back and I've got yours, but just let me have my days sometimes as well, right? Because I'm only human. So other than that, guys, thank you for everything you've done for me. Please support me on Steemit by upvoting it. Like, subscribe, share. And if you guys think I'm killing it, donate. Do whatever you want. Get my dog drunk. She loves cryptocurrency and her 2 6s. Have a great day. Thank you for watching this video and for all your love and your support. Bye now.